Hello, and welcome to Virtual Investor Conferences. My name is Cecilia Schoenbaum, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Vemanti Group. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the bottom left of the slides. Once the Q&A session is ended, don't log out. You will automatically be transferred into the Vemanti booth, where you can continue to ask questions via chat and access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Warren Burke, Director of Business Development of Vemanti Group, which trades on the OTCQB venture market under the symbol VMNT. Welcome, Warren.
Thank you. Thank you very much. Just want to start off by saying thank you for everyone's time today. Thank you for the efforts from the OTC Markets team as well. It's been a great event. I'm really looking forward to sharing the next stage of finance with everyone. So as you are aware, I'm Warren Burke from Vemanti Group, Director of BD. I'm here to talk to you about USDV, our new digital currency that's aiming to take over the stablecoin marketplace. So first of all, who is Vemanti? I'm recently new to Vemanti Group, but the company is actually very well established. They've been around for a few years. They've got some fantastic portfolio investments. Most of these portfolio investments are identified from acquisition investment, really across Southeast Asia, but just not applicable to that specific region, but also focusing on kind of new and emerging marketplaces. This also goes hand in hand with the emerging regions. So how we identify these is really partnering with entrepreneurs that have a good track record, or businesses that have a POC stage. And we're really focused on real solutions, which is very important. Everyone's kind of familiar with blockchain and AI and these kind of buzzwords that come out, but there's no applicable use case for them. Vemanti is actually stepping in to solve this problem by not only launching products that have real world use case, but real world solutions. So what we're actually focused on now for the next step is offering financial services to the unbanked and underbanked around the world. It's a very huge problem. Many people in developed societies may not know this, but it is actually, a vast problem that we'll discuss a little bit later. So the mission from Vemanti really is to focus on how to solve these real world solutions, but how do we solve them now? There's nothing wrong with social enterprise projects and companies, but a lot of them lack one of the key factors of business, which is profit. With USDV, we intend to pass these profits on to early shareholders and people that see the vision from the ground up. So one thing that we've been really looking for is social impact investments in Vietnam. Some of the portfolio investments from Vemanti actually have a social impact use case. Some of these will be through the partners such as Elon's or Funded. But what we're actually trying to do is develop an ecosystem of financial services that are not applicable to one specific region. For example, remittance might be, a major problem between two other major countries, but retail lending might be another problem on another. So how do we use these ecosystems to build out an actual use case of next stage development of technology? So I'm sure everyone's aware of decentralized finance and, this kind of wave that's come over. I'm sure everyone's heard of NFTs, non-fungible tokens. They've actually been around for a while, since 2016 at least. Decentralized finance has been around since at least 2018, or at least a discussion point since 2018. So what it allows is it's not just a decentralized network of technology. We're actually talking about a lot of these being P2P financial transactions. One thing that we can definitely take away from DeFi is it's without a doubt game-changing. The regulation is still missing, compliance is still missing, but DeFi itself has proven, the global demand of what a P2P financial ecosystem can achieve. So we already know that stablecoins and perpetual yield are two of the biggest trending demands. We've seen a lot of projects where they release a governance token or some other form of tokenized smart contract. They sell these, and they're essentially backed by, speculative valuations, or they're backed by, essentially another form of governance token. A lot of these projects, because of the lack of regulation, they manage to, promise a lot and underdeliver. I'm sure everyone's aware of the SafeMoon project that's recently taken over Twitter through Virality, and that essentially offers a very simple 10% redemption fee almost that's distributed. So if someone purchases the token and they sell, they charge a 10% fee, and that's distributed to the rest of the token holders. But one thing that we don't really understand from this is, where is the value? How is this monetized? So one thing that we really want to look at with USDV is, we're not just pulling these buzzwords out. What we want to focus is it's not a blockchain product. We just use blockchain to solve a fintech problem. We're looking for these real solutions with very real applicable use case. People in Africa or Latin America, or some regions of the Middle East or Southeast Asia, these people don't want something that's going to be developed. These people are looking for a solution right now. One thing that we really want to take away from the USDV pool is ESG-focused investment pools. So what we're actually looking to target is social impact investments through this. We want to make a difference at the same time as generating profit for everyone involved, from VMNT shareholders all the way to token holders, to people that actually use the platform and make investments. So if we just look at the global landscape of Unbanked, we can see that it's much bigger than most people realize. More than half of the populations of these countries that we're specifically targeting, they tend to shy away, whether that's from regional disputes, civil wars, economic immigrants. There's a lot of use case, not just from establishing financial remittance channels between these regions, but offering financial services to the people on the ground. And again, due to regulations such as OFAC, trade disputes, we're not able to offer essentially financial services to these regions. What we want to take away from this is, we want to establish financial remittance channels between these, while offering financial services in a compliant, safe, and legal way to the unbanked around the world. So the major problems that we're facing is essentially these businesses don't have access to financial instruments that a lot of the world is subject to. A lot of small-scale investors or retail or SMEs, they don't have access to large-scale payment factoring, invoice or financial markets or financial investment vehicles that a lot of these larger players do. Companies on the unregulated markets like cryptocurrencies, they face a lot of discrepancies between what they can, what they say, and what they actually do. Another thing to remember is that these complex systems of yield farming and high rates of APY and yield generating, it's all very confusing. It demands a lot of work from the individual. And it's actually a $1 trillion market just waiting for a real solution. DeFi has to be bridged with centralized finance, not just from a compliance stage, but from a usability aspect. Everything's exciting, and everything's exciting when we say that DeFi is going to change the world. But for someone who only earns $500 per month, and they're sending the majority of that to loved ones, if I was to send a Western Union, I'd pay maybe 10% or more. If I'm sending through a bank wire, if I was able to open a bank account, I'm waiting, T+3 days. I'm also paying a high transaction fee on that. But what's even worse is, if someone is using a decentralized finance product, they happen to forget their PIN code, they could be locked out of their account in eternity. They could lose their funds, they could lose everything. So there are aspects to having centralized finance, connect to decentralized finance. If we take the benefits of both, we can truly deliver a good solution. And another thing to remember is these problems that these businesses and these people face around the world. People have been trying to solve them, but we actually think that we have the perfect solution. People out there in these unbanked regions are using multiple products. They're using, very unsafe methods. Methods such as Hawala, which entirely relies on the trust of the individual to pass funds between two different parties globally. We want to remove the the trust aspect and allow these people access to a financial service and product that they can take with them anywhere. They don't need to have a fixed abode address. They don't need to have 10 pages of documents, to prove who they are. We can accept them onto our platform with anything as simple as a photo ID. So USDV is essentially a globally fluid stablecoin. People are asking us, what's the benefit and the monetization from the stablecoin? We want to offer a multi-chain aspect to stablecoins. So imagine that we have USDV working on Ethereum, Binance Smart Chain, Stellar, compared to what most people use today is Ethereum, most tokenized smart contracts at ERC20, and as most people viewing will be aware, the gas fees are notoriously high. So if someone is sending $50 back home when they only earn $500 per month, but they're getting charged $80 to send that $50, it's not a very compliant solution. So by offering multi-chain aspects of the stablecoin, not necessarily using parachain technology, but that's definitely available, we want to make sure that everything runs smoothly no matter where this person is in the world. If they're sending from Africa to Bangladesh, it's not a problem. If they're sending from Latin America to Japan, it's not a problem. If they want to send from Vietnam to North America, it's not a problem. So on top of this, we have to make sure it's regulated in each jurisdiction. So one of the ways that we achieve this is by working with OTC desks and partners on the ground to establish essentially their own franchise, if you like, of the product governed by ourselves in partnership. We're able to scale this solution very, very quickly. We've already spoken to partners in across Southeast Asia and Latin America, and we expect a lot of demand from a lot of the communities that we've managed to build there. We also want to make sure that the perpetual yield is very easily accessible. We can't guarantee a rate for legal and compliance reasons, but we can anticipate around 10% APY very realistically, although this may rise or fall with the market rate of how the capital is deployed. And the case study we've done on SafeMoon really just proves there is a demand for perpetual yield stablecoin. All we need to do is get the eyes on it, and essentially the adoption will pretty much take care of itself. We did a case study with some of the competitors that we'll discuss later, but when we're offering an all-in-one compared to a one-of-all solution, we highly anticipate not just the rise in the community, but the adoption for the product itself. So the main focus for us is to unbank the banked and bank the unbanked. So what this means is we want to pull people away from traditional finance markets that are, traditionally restrictive, and we want to bring people that don't have access to, high technology financial services, and we want to bring these two together. The way that we anticipate the rapid global growth is through the franchise and white label initiative. This allows people to build on top of our remittance channel, offering their own product within the region, except everything's built on our financial rails. So what this means is it's essentially the way for us to compete with Western Union or TransferWise. These large players have already secured an exceptionally large market share. We also want to focus on the P2P exchange, allowing users to trade different sorts of cryptocurrencies or offering Forex arbitrage themselves in a relatively simple UI. One of the key aspects of USDV is the ability to stake and save, compared to banks offering less than 0.5%. We believe that the APY we can generate is much more attractive to a lot of these people with lower income households. We also want to condone the safe compliant. SAFE is essentially high risk merchants. Through our payment factoring solution built with the remittance platform, we can process a lot of these high risk merchants very efficiently, very quickly, and especially not waiting T+3 days. We're talking like T+1 minute for a lot of these transactions, which as a POS form of payment, it's actually very efficient. Also allowing the business owner, the business on the receiving end of the POS system, the ability to move those funds anywhere. If you imagine someone like Macy's, I think the Americans, at the department store. If I go into Macy's and buy a sweater, if they integrated the USDV POS system, the funds could actually go straight from the consumer to the factory in Bangladesh, which means Macy's is no longer a retail store. They're essentially, a middleman, just like Amazon is. They're allowing other people to sell through their platform. So the benefits for, a department store like that, being able to issue the funds directly from the point of sale to the factory or manufacturer, we can discuss a lot more about that later, but we think that's very exciting. And the last thing is essentially the financial inclusion for the underbanked. We want to make sure that these financial services are being offered to these people from low-income households around the world, especially the unbanked, mainly because they're the ones that could really need it. Putting the product in the hands of these people that really need financial services, not just financial education, but maybe investment vehicles as a community, we believe is a very powerful solution. So I just want to spend a couple of minutes to explain the flow of funds. So as you can see, we have multiple custodian and trustee partners. The reason for this is to essentially ensure the capital deployment is able to move fluidly and compliantly. As you can see on the left, we partner with various lending platforms, whether these be traditional finance or decentralized finance. Decentralized finance, big players like Compound, Curve, etc. Lending platforms, we aim to target the portfolio investments of Vemanti. This is also to ensure that we get preferential repayments of the liability that's been taken out. And we can also ensure that the reserve is essentially repaid and the interest is repaid alongside that. Moving on, you can see that you can see the minting and redemption in the top left. What this means is whenever one USD is deposited with the custodian, one USDV is created. What this means is there will never be more USDV than there are US dollars within the custodians. So this allows us to essentially govern the amount of USDV that's within circulation. If we have too much capital to deploy, we can lower the amount of minting. If we find that there's a lot of people staking, we need liquidity, we can open up the minting to distribution partners, retail, etc. Moving down, we can see that the token holders sit in the middle of the fund flow. This is where a lot of the staking and selling come in. Most token holders in retail will interact with one or the other custodian. This is just to allow a very efficient KYC process that doesn't hinder a lot of the distribution partners. So this is to make sure that people always have a method of minting and redemption. The buying and selling interaction with the custodian and the trustee is just one method that a user has to obtain these USDV tokens within the United States, for example. Moving there from that, we move the USDV tokens over to crypto exchanges or with crypto wallets. This is where the staking and saving comes in. The crypto exchanges is really just a method of distribution. We don't really like how USDT has been operating in the gray area for many years, and we don't necessarily trust a lot of the other stablecoins out there. But one of the main reasons for us wanting to launch this is the ecosystem that we plan to build around USDV is offering these financial services to the unbanked. We found a compliant way. We understand why a lot of other stablecoins have not wanted to focus on anything outside the United States. There are plenty of other stablecoins pegged to multiple different currencies, and USDV is just the first one. We intend to launch a Great British Pound V. We also, RMB, VND, Japanese yen, whatever fiat currency there is, we can tokenize it and we can launch our own stablecoin. One of the things this also allows is for us to forex arbitrage between our own ecosystem and then obviously the special investment vehicles that exist in the world today. From the token holders, we move into payment platform. Token holders in the middle, we move to payment platforms. And the POS systems essentially interact with everything from buildings to stores to individuals, allowing people to use it just as fluently as cash. The reason that we anticipate this to be a success is because we know that each USDV will always be worth $1. We already have the market-making technology set up. We've been testing it with a very offline order book ourselves, and we feel that offering a true one-to-one stablecoin is the best way to gain adoption. But also offering the perpetual yield alongside a true one-to-one stablecoin is the best way to attract a lot of these people from these various unbanked regions. So how essentially do we plan to build out the USDV aspect? Well, as I mentioned before, we have multi-fiat stablecoins, or localized stablecoins as we prefer to call them. The retail and P2P lending is one arm of the perpetual yield angle. The NFT marketplace is another method where users can spend the USDV. We have features where we plan to offer the interest on stake and save tokens that's already been with us. And as mentioned earlier, we are going to be focusing on ESG investment pools, allowing people to choose how they generate their yield. If people would like to invest in female-owned businesses, they can earn a specific rate for that. If they would like to focus on agriculture in Africa or Latin America, so whatever, we have different risk appetites, different investment pools for those. Also, we have another question from people asking if the CBDC currencies are going to have an impact on USDV, and we honestly don't anticipate any issues. Actually, one of the benefits with this would be a middleman between a lot of these CBDC virtual currencies. So situating ourselves in the marketplace right now as a compliant SEC-regulated stablecoin, we feel is the best way to push adoption, not just for cryptocurrencies, but also for digital financial services. So, what essentially are the benefits? If we look at some of the competitors, transfer-wise, they have revenue over 300 million. Venmo, which is essentially mobile payments. Coinbase is most likely the biggest cryptocurrency-focused competitor that we've analyzed. Their revenue obviously comes from a lot of the exchanges and a lot of the OTC sales. But with players like PayPal and Cash App stepping in and providing more of an on-ramp into the crypto space, PayPal more conservatively, not allowing users to withdraw the cryptocurrencies. And obviously PayPal being around for, its length of time has obviously, increased their revenue. But what we anticipate is if we can offer the majority of these services, alongside a lot of these big players, you combine that with the adoption rate of something like SafeMoon with perpetual yield, something that allows a lot of these users to essentially jump on board and do an all-in-one rather than, a one-of-all solution, then what we're talking about is a very high rate of adoption, especially in regions that are subject to severe distrust of financial institutions. We would like to come out on top and offer these people essentially a good service and a working product that works straight out of the box. So next June, we'll be launching essentially just to give you a quick review of the partners that we've been speaking to and some that will be launching alongside us in June. So next month, we'll be launching the web platform version. You can see here that it is already live. We were unsure about including the video just in case we weren't able to play it, but if anyone would like to sign up to a beta or review the product, we have a Telegram group that you can join. You can find us on Twitter. I'm more than happy to give you more details, more screenshots, etc. Lastly, this is just a quick disclaimer that everyone's free to read at your own choice. If you'd like a copy of the slide deck, more than happy to send the whole slide deck to you guys in PDF format. You can also find my email and the OTCQB ticker at the bottom right, VMNT. If you'd like to drop me a line, that's more than happy to answer any questions. I do try to be quite active in the Telegram group, which is also a lot of our supporters and a lot of the community reside there. So feel free to jump in there. We have a couple of questions. Would there be a debit card, credit card, or Apple Pay function in order for a consumer to use and spend USDV at a merchant? So part of the issue with the safe, compliant, high-risk merchant payment system, we are able to take a card payment, process that as a stablecoin purchase, depending on the MCC code of the PSP at the time, and then we can send the stablecoin to the business owner. And then we have a payment factoring partner that essentially sits in the middle and pulls the finances while they wait for that T+3 transfer to go through. So yes and no. No, they cannot buy the USDV tokens directly, but we do work with a trustee and custodian that can process these, but there may be a fee involved, and that's out of our hands, unfortunately. Apple Pay, I'm not too sure on their rules and regulations. I don't think that they work with MCC PSP codes for digital payments. Referring to page 10 of your presentation, which of the functional blocks are fulfilled by Vemanti Group? So go back to 10. All of these, actually, all of these, oh wait, sorry. These, gotcha. Okay, so these are actually most of them besides the custodian. Obviously not the DeFi partners or the crypto exchanges, but the crypto wallets and the lending platforms, because Vemanti has a controlling share or a large investment in these companies. They essentially have a say of how the capital is deployed. So majority of them are governed by Vemanti. How is your tie-up with Marina Gold come along? What are your expectations from this relationship? Unfortunately, I'm not versed in some of the other portfolio investments. It might be better to reach out to Tantran on Twitter about anything else Vemanti Group related. I'm more focused with the USDV project as of this time. Cool. So, guys, I will leave the email up here. Thank you very much for your time today. Really appreciate it. I'll stick around in the virtual booth. I'm really looking forward to some more questions. Feel free to follow us on Twitter. I am Warren Matthew, 1T on Twitter. Feel free to join the Telegram group where I'll answer more of your questions.